What's up guys, welcome back to InvestingPH. It has been a rough month for us in the stock market, with the PSEI dropping again to 6,700, but this isn't new to us, especially for those who invested pre-pandemic. Now these past months, the index has been trading sideways, though some may think this is not a good thing because they aren't gaining much in the short term. For me as a long-term investor, this is a good opportunity to increase the bulk of my portfolio with great companies that are undervalued. Anyway, more on that later. So with that, let's head on to the update of my portfolio. If you're new to the channel, my name is Mike. I talk about finance, investing, and every end of the month, I show an update of my portfolio so that you guys can see how I am applying the things I've learned, and this way you can also learn from what I'm doing and from the mistakes I've done as well. And before we begin, I would appreciate it if you smash the like button for the YouTube algorithm, and if you still aren't subscribed yet, might as well hit the subscribe button as well. Now these past few months have been rough for Filipino investors. We are still far from our pre-pandemic numbers. Our index is still trading below the 7,000 mark and has now dropped to 6,700. No one knows if it's going to continue to drop. But one thing is for sure, what we shouldn't be doing is getting too emotional. This way we refrain from making stupid decisions that will affect us in the long term. Now I'm also saying this because my portfolio as well is affected by the sudden drop in the price of the stocks I hold. To begin with, my total invested money is now 1,236,200 pesos, and the value of my investments is 1,330,082, giving me a 7.59% total return, which is 93,882 pesos. With this, why am I not even shaken about all that is happening in the market? Even though most of my stocks are down, and I'm seeing my returns drop day by day, well, because I'm not thinking short term. I am even happy that I get to buy the stocks I want at a discount, because why rush when you see the PSEI as well is still far from recovering? Stop comparing yourself with other investors. Like investors in another country, like the USA, their index has already recovered and has even broken past its pre-pandemic numbers, while we are still lagging behind. And the thing is, I won't even use the money I've invested. I'm not going to use it for the next 5 or 10 years. I'm going to keep it there for a very long time. And with the market trading sideways, even though you aren't gaining much now, in the long run, when the market rises again, since you bulk up your portfolio with great companies you bought at a cheap price, then your gains would be greater, though you can't see that from a short-term perspective. And the best thing about buying companies at a cheaper price, the dividend yield also increases. In fact, if I didn't reinvest all the dividends I got, my total gains would almost be negative. This is what I keep saying every time in my videos. Dividends are powerful, so reinvest it back. This is very true, especially when the market is trading sideways. Now more on the dividends later. So what is happening in the PSE market? First, the fear of another COVID surge lurking around the corner. Well, this had been the main cause of the market moving up and down ever since last year. Another is the increase in oil prices, which is a real pain in the wallet whenever you use your car. An analyst says the Philippine stocks may move sideways as elections draws near. Now I just want to go back to what I said earlier, looking at a longer time horizon. If you focus so much on the short-term side, all these news, at which I call noise, will definitely affect you. With you going for the long run, the only benefit of all this noise is the opportunity given by the fear it is causing to short-term investors, at which you can buy great companies at a discount. I've mentioned this in my last video, where I talk about 8 things you need to know before you invest. I suggest you watch it. Use emotion as an advantage. Moving on, the stocks I bought this month are Costco, Megaworld, and I reinvested some of the dividends I got this month to LTG. With that, these are all the stocks I own. LTG has the largest percentage of my portfolio, taking up 13%, followed by Megaworld with 12%, and with the continuous acquisition of shares of Costco, it is now 5% of my overall portfolio. In the past weeks, Megaworld and Costco had been buying back shares of their company as well. Grouping this by sector, the holding companies are now worth 32% of my total portfolio. Next is real estate, 19%, then banks at 14%, energy sector, 9%, technology which consists only of my Globe stock, 6%, food and chemicals, 5%, My index fund investment, which is in my VUL, 5%, and others below 5% are REIT, retail, and transportation. Now, I've explained in my previous portfolio reveal why I love buying holding companies, since by buying one company, you get to hold different businesses held by that company indirectly, and a lot of holding companies are still undervalued. This led to its drastic increase since it's been a few months now that I've been constantly buying holding companies like LTG and Costco. For my dividends, I've got quite a good amount this month since DMC and LTG, my biggest dividend stocks, paid this month, which increased the total dividends for this year to 23,922 and now brings the total dividends I got so far ever since I started investing to 75,883. It really makes me happy seeing this grow. I could already feel the presence of my dividends income, and this also explains why dividends are so important in investing and why you should reinvest them. Imagine if I didn't reinvest back the dividends I got, my returns would almost be negative. Not only that, but it also plays a big role during a sideways market like what we are experiencing right now. Though stock prices aren't increasing, I am still getting returns from my dividends, and this would already earn me more money the next year. Think about it. For example, my total portfolio's dividend yield is 4%, meaning my dividends would already earn me 3,000 pesos more dividends the next year. That's money working for me, and this cycle would just go on and on for the next years to come. My goal is to reach the point where the dividends I get every year would be bigger than the money I can invest coming from my daily job. And the benefit of getting dividends doesn't stop there. This would also help me mentally to go for the long run, even when the market doesn't climb up, even if it stays sideways for a long time. Now this does happen. It already happened in the PSEI. If you look at the 2000 market crash, it took the index 6 years to break its previous high, which is in 1999. Now with dividends, you're still earning even though prices are stagnant. Now as for how well my portfolio is doing compared to the index, the PSEI is still down at a negative 7.73% compared to its point in July of 2019 when I started investing, while my portfolio is at 7.59%. Though some of you would say that my returns are small, well, I'm happy with it, especially when I see our market is still far from recovery. I'm still beating the index total returns in the past 3 years. So one question, can I continue beating the index? Well, I don't care much about that. I'm just going to stick to my strategy as always and buy great companies that are trading at a discount. If I beat the index, then I'm happy. If I don't, then I won't be sad about it. I'll just continue what I'm doing. And one reason why short-term performance doesn't matter too much for me, the companies I'm buying isn't undervalued without a reason. One, it's not popular. Another, the company may be having some problems in the short term, which can lead to the stock price dropping even more or remain stagnant for a long period. So that's how I want to approach investing. I want to make it simple and easy, which I can maintain for a long time. With that, this ends my update for April. To end this video, I would like to share a quote from John Bogle. Time is your friend. Impulse is your enemy. This quote I think is applicable for what is happening right now. Some investors tend to sell their investments when it starts to drop in value. John Bogle states that developing and maintaining an investment strategy over time will be much more beneficial for your portfolio development, and impulse decisions based on emotion will cause harm to your wealth. A lot of investors do this mistake, not only in selling investments when it is at a depressed price point, but also when the stock price is reaching all-time highs. The impulse of greed takes in, buying at a very high price, and when the hype for that stock diminishes, this leads for the stock price to go down yet again, cutting their investments big time. See why impulse is your enemy. So try to stick to a certain strategy and let time and compounding do their wonders for you. Don't focus too much on the short term. With that, if you still haven't clicked the like button, I'd appreciate it if you do so before leaving. And if you want to learn more about finance and investing, be sure to click the subscribe button as well to be notified whenever I post a new video. I do this portfolio update every end of the month. So thank you and see you in the next video.